Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at something that happens every time we go past the halving, and yet no one has actually picked this up. We'll also have a look at the 60-day cycle and see exactly where we are. And also today, I'm going to be looking at some ideas about where the top might be just by looking at some of the trend lines. If you've been watching my videos, you know that a few videos ago, I showed some indicators which will be the guiding light to tell us when this market, this bull market in 2025 will top off. Today, I'm going to have a look at just the trend lines and see how they're faring in terms of the actual support and resistance that's been forming over the last many years. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to start off with a larger, bigger picture view and ask ourselves, why is it that the Bitcoin chart always seems to do something just after the halving before it goes into the parabolic phase of the bull market? So what is it that it does? In the last many videos, I've been showing you this particular orange trend line here, which is the support line from the bottom of the market towards the halving. So as you can see, from the bottom to the halving, there's been a support line here. So what I'm going to show you today is something really interesting and something you need to be really aware of, especially if you're trading. So we're going to start off with this cycle here. So just notice this particular pattern. So once we've come to the bottom of that bear market here, that's your first point for this support line. Then along the way, you'll find that it finds support at a few points. Here, watch what happens after the halving, this red vertical line. After the halving, it comes and finds support on that line one more time. So this support line is giving you a clue that after the halving, price is going to find support one more time before it goes into the parabolic move. So this will be our clue when the parabolic phase is about to begin. So that was the first cycle, i.e. the first halving. If we move on to the second halving here, exactly the same pattern. We get to the bottom of the bear market, and when we do, we start creating this support line all along here. And then after the halving, what happens? Before the parabolic phase, we have another retest of that support line. And then we go into this parabolic move. And the last cycle, back in 2020, when we had this halving here, this vertical line, one more time, we had the bear market, first point of the support at the bottom of the market. Then we got some more support all along there, very strong. And then one more time here. And then, as you can see, before this COVID situation hit over here, the market was already coming down. And if we didn't have this COVID situation, where do you think this would have found support when you've already got 1 point there, 2 points there, virtually 3 points there? So this was going to actually stop, more than likely, high probability at around about that point. And if you continue that through after the halving, one more time here, another support before we went into the parabolic phase. So as soon as we touch the support line here after the halving, that is your clue to just get in, sell your house, sell your car, sell the world, and put your money on Bitcoin. Obviously, I don't really mean that. So the million-dollar question is, where is this support line now? Well, if the previous cycles are to be believed, and if the chart follows the same pattern as we would expect it to do, because we have no reason not to, we've had the bear market, we set up our first support line here, and since then, we've already had a support here. That's the second point. So now we know there is a trend line here. And after the halving, look where the halving is. And after the halving, you know that it's not going to fall below it because it's going to find support on this line. So at the halving point, the price is at 37,000. After the halving, it's very unlikely to come below this point here at 37,000. So we know now that if we get to the halving in April, we have a historical 13-year support at a point where it never seems to ever go down below it. And it's the 37,000 in this particular halving. And don't forget the ribbons that I've been showing you over the last few videos, that over the last 13 years, that once we get above the ribbons before the halving, which is over here, that point is a point that the price has never returned back to in the history of the Bitcoin price. And that level is at 28,000. So we now know, as long as it doesn't fall back down below these ribbons now, before the halving, I'll put that line back in again. If it does do that, then we would have to wait for it to come back up above the ribbons to create that next price. But more than likely, as I've shown you before, usually about 5, 6 or 7 months before the halving, the price seems to always go above these ribbons. And once it does that, that is the final time. And what the patterns have shown us is that once it does that, it never goes back below the ribbons after the halving. So I hope you found that interesting, amazing actually. So if you're in the charts, then please put this support line in, because you know that highly probable that this is not going to fall below that support line. Okay, just a general look on the wider markets. As I showed you last week, the dollar is on a steep decline currently, which gives the wider markets a clear run to the upside. And if you remember, I showed you this SPX when we'd fallen below this trend line here. And I mentioned at the time, this could be just fading and we need to watch out for the price back above this red line here. And that if we can manage to get above it, then this is what is more likely to happen. And this is exactly what's happened here. And I know that many people out there, once this had fallen out of this red line support, they were calling this a bear market. Certainly that was a bit premature, but here we are. We're going back to the upside again, probably going to test this level here. So may get a rejection, or it could even be a double top, and then it may well be a fall down. But considering the wider economic background now, with the interest rates more likely to fall and the dollar coming down, it may well be that after a rejection here, we may go and make higher highs here. And the Dow Jones has also followed suit. It found support on this very strong support line here, and we're going to be retesting this yellow support line all the way here. So you know that at this point, more than likely it's going to get rejected, but it then may push up afterwards. So look out for that, but certainly it's in a bit of a bull trend at the moment. And I haven't shown you this chart for a while. This is the HYG. This is the junk bond market. The reason why it's important is that this is very sensitive to what's going on in the economy. The people with junk bonds tend to pick up the signs much more quicker because these are extremely risky. So it's only when they start to get a little bit more confident that they start to actually buy up these junk bonds, and vice versa. When they can smell the economy is going to be on a downturn, they sell off very quickly, as you can see here. But so far we made a double bottom here and we seem to be going on the upside. Maybe this is giving us a clue that we're now going to have a big upturn one more time, just like over here. You can see when it starts going, it really goes very quickly. Very sensitive to economic data. Okay, so going on to the 60-day cycle, incredibly important, and it's been so far very useful, especially doing the swing trades with the Bitcoin miners, because what we've tried to do is to try and get the 60-day cycle bottom and then to play the Bitcoin miners on swing trades to the upside. Now we've been doing that since March, April this year. So for the first couple of cycles we did really well here and over here. We then had 2 failed cycles where they didn't actually meet our targets and we got stopped out. But one more time in this cycle we're now doing really well again, one more time, because it looks like with a high probability that we're going to make a right translated cycle. So this is what I want to get into now here. So currently we're on day 39 and we're in this cycle from this red line to this red line. White line is the midpoint. And in a right translated cycle, whatever the high was before the midpoint, the right translated cycle needs to beat that in order to create a higher high. And having had 2 failed cycles here, it's highly probable that we're going to make a right translated cycle by going up and retesting this zone here, which is exactly where the RSI MTF line is, which I've been showing you over the last many videos. And if we have a look at that, just change the color to blue just to make it stick out because we've got yellow lines here. But you can see that at the moment, it's been changing a little bit. So currently it's at 41,200. So this is where I would expect the Bitcoin price to top out in this cycle, creates a right translated cycle, and then goes into the next phase, into the 60-day cycle low before we start to make into the next cycle. And that's where we'll probably hit this 48,000, and that's where the pi cycle is. And as you can see, it's a rising line at the moment, and currently, instead of being around 50, it's actually at 52. So this bullish nature here is actually increasing the pi cycle line to higher levels. So it may well be by the time we come down here, this should come back a little bit, and then when it goes up to that level, certainly it should be around about this level between 50 and 52. And as I've shown you with the EMA ribbons, as well as that support line, we know that the price, once we get past the halving, isn't going to come back to less than 37. And the 60-day cycles is telling us exactly the same. So there's a lot of confluence of the various indicators telling us that the 37 is going to be a critical level, because this green line is also giving us exactly the same thought process. Because if we zoom out, we'll see where this green line is. So we can see that this green line is incredibly strong in terms of finding support, then resistance, resistance, support, and currently it was resistance. Now we've broken above that. So the chances are the only thing we're going to do is come back to that, and unlikely to fall below the green line based on those indicators that I've shown you. Okay, I'm just going to give you some ideas about the top. A lot of people do still ask me where the top of this bull market will be, and just a few videos ago I showed you. So if you go on my channel, you'll see that there was this video that I did just 12 days ago about the signals for the 2025 Bitcoin top, and those are the signals that I'm going to be using to get out as far at the top as possible. And there's a lot of interest in that, and you'll see a lot of other YouTubers also giving their opinion and their view on when that might well be. And I just want to show you some ideas just by drawing a few trend lines apart from those indicators that I showed you in that video. So the first one is the obvious one at the tops of the previous two cycles. So if you take it from this top here, I've just moved the yellow line, the top line here. If you take it from the top there to the top of this point here, now that would suggest that the top of the market could be at 320,000. And if you take it from the support lines along the way here, that would suggest we get only up to about 48 and then we roll over here. That may seem highly unlikely, but we have to consider that because it is a strong support line here. But we would expect at the top of the market to be at the top of the trend rather than at the bottom of the trend. Now there is a third line which goes through the middle of this channel that I've just drawn for you, and that is from the 14,000 back in 2019 to these support lines here, which were the head and shoulders that brought the price down here. So if you put it through those lines there, that gives a very realistic price that a lot of people out there are predicting. But there is obviously a reason behind that, and look at this line from 14 and this head and shoulders that we had over here, where we fell out and went into the end of that bear market down here. And that price comes to around about 125,000. And since we have a law of diminishing returns in terms of the tops that we've had over the last 13 years, that would fit in nicely with that type of thinking. And since that is a very strong trend line here, because we have an intermediate top, which the 14,000 was, then we had a very strong support here, a strong support all the way along here one more time. So we've had three incredible support and resistance points here, which means that the added bonus for us is that as the price is coming up here now, wherever it meets that line, wherever it's going to be, over here let's say, then you know with a high probability it's going to have a correction before we move into the parabolic phase or something. So if we do hit this line before that, there are two ways of looking at it. That may well be the top, or it's going to have a correction at that point if it hits it before the end of the 2025. So we need to be just aware of this particular red line here. Okay, just a quick mention about the trading view. Quite a lot of people have been commenting over the last many weeks and months about not being able to get the charts and the options, because on the free trading view you don't get that many options, and in the last few months the trading view has actually reduced the number of free indicators and reduced the number of options within many of those indicators as well. So what you can tell is that the trading view is trying to force people to go into a paid version of their trading view. They don't want to really make it free anymore. You may not be aware that this week TradingView is having a Black Friday sale for all of their different options. And if you wanted to, you can use my link, and because of the Black Friday sale, their prices for the various options is much, much cheaper than it otherwise would be. So if you're thinking of actually going into a paid version of the TradingView and you were looking for the best prices, you can use my link below my video here, and you'll see that there is a Black Friday sale of up to 70%. So this is your great opportunity to sign up for the cheapest version of the TradingView in order to be able to trade properly with most of the options available. I think they start off at around about $10 or $12 per month. Okay, just a quick update on the Bitcoin miners swing trades that we've got going on the Bitcoin Miners Club. We've now got 2 live trades currently with 2 of the miners, and so far since 18th of October, we've closed our position on 33%, 7.5% and -5%. And Miner D currently, which is a live trade, we haven't closed this yet, is currently up 13% on the Friday's close. And then on Friday we did start another new live trade which has an upside of around about 30-40%. And this week there is another one that I will be starting, which I'll be sharing with the Bitcoin Miners Club, which has a potential for about 60%. And obviously this is swing trading, and obviously there are no guarantees in there, but so far we've done really well since we've been doing these swing trades since April this year. And if you're interested in joining the growing community at the Bitcoin Miners Club, you can do that by clicking the join button here, and for the price of a coffee per week, you'll have access to all the technical analysis on some of the main Bitcoin miners that we cover for the longer term as well as the swing trades. But as usual, a word of caution with the Bitcoin miners, because they're a leverage play on the Bitcoin price, they're obviously going to be much more volatile. So if you're not of that disposition, then obviously you shouldn't join. But for those of you who are looking for a leverage play on the Bitcoin price, that's another option for you to go for. Okay, so I'm going to leave it there. Hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.